Hello and welcome to this market and economic update. In this video, we're going to discuss the ongoing military situation in Iran and what it means for markets, oil prices, and your portfolio. Now, first and foremost, the safety of civilians in this region, along with our troops, is the most important consideration. These are serious events with real human consequences. That said, investors naturally have questions about what this means for their financial plans. As President Eisenhower once said, plans are worthless, but planning is everything. And as being a financial planner, I think plans are not worthless, but they have to be dynamic. Now, if we apply this to today, what it means is that our specific geopolitical events are unpredictable, but the fact is that they often occur. Rather than trying to plan around specific events, it's more important to have an investment and financial plan that works for you throughout these types of uncertainty. So over the next few minutes, we'll put the developments in context and discuss what long-term investors should keep in mind. First, while the scale of the current strikes is significant, it helps us to understand that tensions between the United States, Israel, and Iran have been building for some time. The latest development follows on lengthy U.S. military buildup in that area, failed nuclear negotiations, and really a series of escalating confrontations stretching back years. As this chart illustrates below, there is a long history of conflict in the Middle East involving the United States, from the Gulf War to the wars in Iraq and Afghanistan, more recently the conflicts involving Israel and Hamas. There have also been many attempts at nuclear treaties between the United States and Iran. The history also made clear that geopolitical conflicts are not always a catalyst for lasting market movements. In fact, Middle East events have not always had a long-lasting impact on even oil prices. This is an important reminder that dramatic portfolio changes in response to geopolitical headlines have rarely served long-term investors well. Next, for investors, the most direct way that Middle East conflicts affect financial markets is through the oil prices. Iran sits on the Strait of Hormuz, which is approximately one-third of all seaborne oil exports pass through. Even the threat of distribution in this critical waterway can move energy markets. Oil prices have already been, rising around the strikes and have been higher ever since. However, some perspective is important here. Current oil prices remain well below the 2022 peak of nearly $128 a barrel when Russia invaded Ukraine. Today's environment is quite different. Immediately after the latest strikes, oil prices are around the $70 range per barrel. Okay, so the important to note that U.S. became the world's largest producer of oil and natural gas back in 2018, with the domestic production currently exceeding that of Saudi Arabia and Russia. This helps insulate the domestic economy from supply distribution abroad. As we see when Russia invaded Ukraine, oil prices may have been expected to stay elevated, actually stabilize and decline far sooner than most project. What I'm more interested in seeing is how this progresses for China, being that they were getting a lot of oil coming from Iran and other countries that have recently been in the headlines. More to come on that as soon as I have more information. And finally, and perhaps most importantly for long-term investors, history shows that value of staying invested through periods of uncertainty. As this chart illustrates right here, markets have navigated even the most serious global events, from World War II to the Gulf War to the more recent conflicts. In each case, markets experience short-term volatility, but are ultimately driven by underlying economic fundamentals. While it's worth noting that Iran plays a minimal direct role in the investment portfolios, given the heavy sanctions that have been placed on it for many, many years now. Markets may experience further volatility in the days and weeks ahead as the situation continues to evolve, but trying to time these moves historically has been counterproductive. The bottom line is that maintaining a diversified portfolio along with your long-term financial goals remains the best way to navigate this kind of uncertainty. This is why we believe in PPP, public, private, protected. It's to help you navigate these types of situations. We hope that you found these insights helpful. These are difficult events to process, and we understand you may have questions around your specific situation. At the time of this recording, the market has dropped over 1,000 points. The S&P and Nasdaq were sinking with oil surges and war worries. And here I am making sure that I'm taking time out of phone calls and meetings that I wanted to provide you this peace of mind. But I also want you to reach out if you have any questions so that we can solve your questions specifically to your financial plan and to your investment. We're here to serve. Thank you so much for your time.